Joining us, Daniel Frishberg, Chief Investment Strategist, Laffer, Frishberg, and Bob Auer, Portfolio Manager, Auer Growth Fund. How do you explain the market's behavior today?
You know, it's like Little Red Riding Hood. We've gone from Goldilocks to Little Red Riding Hood. It's trying to suck you in. Come in, have a cookie, your eyes are terrific. It really is. It looks like a grandmother. It looks like it's a wolf wearing a wig. It's not your grandmother.
Do you agree with that, Bob?
No, I don't. I think that the market, you had the worst job loss in 34 years. It looked like it wanted to go down. Now it's going up. So as soon as the bad news doesn't send it down anymore, I'd say it's a good time to buy.
Oh, really? So in other words, you're looking at this as the possibility of signaling that perhaps we're getting through this.
To me, it doesn't look like the bad news is affecting the market like it used to.
Yeah, I mean, this may be one of the first weeks since August that the stock market will be unchanged, period, where we don't have some historic rally or decline.
Well, last time I was on, we were talking about a short-term rally that would be good for traders, but it wouldn't really work for people. The thing is that next year, all these companies, a lot of companies are going to be hitting the wall. They're not going to be able to roll their bonds forward. They're not going to be able to get loans because their covenants aren't, they're not going to be making enough money. They're going to have to offer equity. They're going to be diluting their stockholders. So no matter how good they look technically in the short run, they're going to have to be offering great deals to raise money.
So how do you get past that, Bob, in your mind? In other words, he brings up some key points about 09.
I would just say, has that already been discounted? And so a year ago,
no. The current stuff has been discounted, but what they're going to have to give away in order to get capital to survive has not been discounted. You couldn't imagine what's going to happen and the kind of deals there are going to be. That's why the best thing to hold may be cash, or we keep talking about different kinds of bonds. Right now, I would say mortgage bonds, because that's where the money is going to flow. Fed is going to get the price of mortgage bonds up. You're going to make stock-like returns, and you don't really have the risk.
Well, that certainly has been the trade in 2008, no doubt about it. But Bob is saying, look, here we have negative news, one of the worst jobs reports we've seen, and yet the market ignores it and trades up. So, Bob, if you are putting money to work in this market, what do you want to buy?
Well, I'm looking for companies that are growing 25% earnings, 20% sales, below a 12 PE.
Well, that's what I want to know. Who's growing earnings 25% in this environment?
I have three stocks that I think are very noteworthy. Potash, POT, the stock is trading at $50 a share. It's down from 240, yet they beat estimates for the last 4 quarters. They just guided higher. They're going to earn $12 this year. Estimates are $16 next year. Up from $4, $12, $16. Record, beat it four quarters in a row. Yet why is that stock down? It's just because of a liquidity panic. Another one is Flowserve, FLS, trading at 40. Record. Earnings up 86%. They just guided higher. They're not seeing that. And another one I would throw out is Arch Coal, ACI. Stock is trading at $12. Estimates are $250 this year, $470 next year. 20 analysts, 470. If you take the lowest analyst, let's say the 20 individuals are wrong, the 20th analyst is at 355, up from 250.
Yeah.
Right. So are you a seller on Bob's picks?
No,
or on the methodology?
No, look, yes, the methodology is wrong for the moment. Look, he has a mutual fund. They buy stocks. Those are good stocks, and they're going to make money. The market's going to take them down, in my opinion, and there will be a better time to buy them. When it's time to buy stocks, I'd probably buy his fund.
Well, this one makes a market, gentlemen. We know you're coming back in the next segment. Thanks very much. And we'll see you in a few minutes. We so appreciate it.